now the power of choice has shifted to the consumer. And we saw that, accelerate during the pandemic, right? Where everybody was buying stuff or financing things from their couch. But it really kind of, bolstered what was already happening. And so now the consumer basically at their fingertips can say, hey, if you're not going to provide me with a compelling offer in a short amount of time, I'm going to go elsewhere, right?
Welcome to the Marketing Rapport, a podcast created for and by marketing professionals who seek to better understand their consumers and design unique, personalized experiences that stand out in today's market. In each episode, hosts from Verisk Marketing Solutions connect you to industry thought leaders, practitioners, and experts focused on improving B2C experiences through powerful data-driven insights. It's about how we connect with our consumers and where we can partner together to do it better. This is the Marketing Rapport.
Hello and welcome to the Marketing Rapport podcast. I'm Tim Finnigan and I head up product marketing for Verisk Marketing Solutions. And I'm excited today because I've got a great topic. We've done, if you've listened to past episodes, we've done a lot with media and measurement and strict marketers. We've done a fair amount on subject matter experts around things that are happening like cookies deprecation. Today, I really wanted to have a discussion about marketing and risk alignment and how those two functions need to be in sync rather than separate. So I brought a close friend of mine, Matt Komos, on, and he's got a unique background, starting with sort of the brand side, where he was with HSBC, the supply side with sort of TransUnion, consulting, entrepreneur. Now he's an entrepreneur. He started his own company, but it's always been around risk and analytics. Welcome to the podcast, Matt.
Tim, thanks so much for having me. Great to see you again. It's been a while, my old friend.
It has been. Our paths crossed at TransUnion, where we were both there, and I quickly glommed onto you. I think I remember it because we were doing Zoom. It was like doing close around the pandemic, and I had the big Colorado flag behind me, and you're like, "Are you in Colorado?" Because I'm in Colorado.
Right. Yeah, and at that time, right, it was like, I might work from a hut in the middle of Idaho and nobody cared, but I was curious. Yeah. Do you live in Colorado? And you said, no, I just love the place. And yeah,
you did. You were going to buy a place in Idaho. Is that still on the timeline?
It's always on the back burner. We'll see how successful the new venture is, and we'll go from there.
Well, speaking of the new venture, I'm really excited to hear about what you're doing. You started your own company. Tell me a little bit about it.
Yeah, I'd love to. And this is not my first foray in entrepreneurship. We can talk about some of that background as well. But the company is called OGMA Risk and Analytics. And so your watchers don't have to go digging around to understand what OGMA is. It's the Celtic god of knowledge and language. So I would think a Tim Finnigan would appreciate that. It's a little.
I was wondering because your logo is like, that's a Celtic knot, but I have no idea what it means. But go ahead.
Yeah. So OGMA is a Celtic god, and it's a little nod to my Irish heritage as well. But we provide risk management and analytic consulting, really focused initially in the credit union and community financial institution space, the fintech space, buy now, pay later, credit builder, and even more traditional lending institutions if we can provide them with useful services. We kind of have a different amount of kind of services available, whether it's a full-on risk assessment, understanding the current environment, providing recommendations, identifying where there's gaps, right? Where maybe the marketing and the risk aren't aligned, and providing a roadmap so that the institution that I'm working with can kind of move along that roadmap to improve their current environment. We also build custom models, risk strategies. We'll review policies. We'll help lenders understand how to incorporate new data, right? Alternative data, which is big nowadays, and I'm sure we'll talk about this a bit. Cash flow data, all of these things that have become really ubiquitous in the lending environment. A lot of lenders are still trying to figure out how to best utilize these tools. And so our firm can help bring that. We have a full analytic team that will help be the fulfillment engine. And as we grow, the goal is to bring subject matter experts together to help really address any issues that our clients have.
Hey, Matt, let's just get right into it with the new types of data, because I know every day our group at Verus Marketing Solutions is always hearing about the need for sort of new data sources to bring into their models. So besides your cash flow, like in your career, you've worked with new types of data and how you incorporate that. Just talk a little bit about sort of these new data sources and how you've used them in models.
Yeah, it's a really important area that's been growing for a number of years. And if, working at one of the credit bureaus, it was kind of standard procedure to evaluate additional data beyond the core credit data. Of course, it depends on the use case, right? You need to use FCRA regulated data if you're going to be making a lending decision. But marketers have a little bit more flexibility, right? They can bring in some potential non-FCRA type of information to maybe do an invitation to apply. It's interesting because there's always this new data coming up, right? And as you mentioned, it's becoming kind of like, I want it in my tech stack. I don't know if it's valuable, right? We see this a lot. I'm not sure if it's valuable, but get added to my tech stack. We've seen kind of the advent of short-term lending data, right? All the bureaus now they've acquired short-term lenders. So the payday space, understanding consumer payment behavior in that space, utility, rent, telco, hot areas, right? That lenders want better insight, or insurers. They want to understand, how does the consumer pay these different obligations? At the end of the day, what you're trying to really do is build the holistic view of the consumer, right? The core credit data is just one insight into the debt obligations they have. But, as a consumer myself, and for yourself, right, we have other payments that we make that might not get captured in that information. We're paying utility, we're paying our telephone bill, all these, maybe Netflix, right? Streaming services. It helps build that big picture of what's going on with the consumer, so that when I'm making a lending decision, I can really get a sense of that consumer's ability to pay. Because at the end of the day, that's what a lender's trying to evaluate, right? I want to make this loan. Is the consumer going to pay me back? I'm going to provide this insurance product. Are they going to pay their premiums, right? These are the questions being, you're trying to answer with this new alternative data. And really, it's meant to be orthogonal to that core credit data, meaning I get an additional insight that I can't see today.
Orthogonal. I did not have that on my Verus bingo card, but I do appreciate you, Matt, not saying TransUnion. You're just saying the credit bureau. You can say, although TransUnion is a competitor, they're one of our biggest customers as well. So you can say TU.
Well, it could be any credit bureau,
yeah,
really.
There you go.
At the end of the day, for me personally, OGMA is, agnostic to who we work with. So if you're using TransUnion data or other credit bureau data, we're fine with that. But having been in the walls of TransUnion, and as you said, you work with them today, I know the data they have pretty inside and out. So,
And speaking of that too, is that you bring up the credit bureau or the credit trigger data, and just as a little aside, one of the new it's not really new types of data, but one of the things that our customers are really interested in is this in-market shopping, and we're able to grab some of that data, which is, even before credit triggers. So there's just all these nuances that that our customers and prospects are asking us about, and there's so much of it. But I do want to get into some of the stuff that you did in the past with your research around fintech and insurance and mortgage. It seems like you've got a pretty good handle on what's happening and what's coming through your research. Do you have any insights you can share, or stuff that you've done in the past that is happening, that could happen again?
Yeah, so I think one of the it was a analysis we did pretty frequently was around the payment hierarchy, right? And so understanding how a consumer prioritizes the bills that they have to pay, right? If you think about a consumer's monthly obligation, they have a limited pool of income that they can apply towards all of these obligations. This is why it's really important to get insight to this alternative data, because again, if you're just looking at bureau data, you're going to get an incomplete picture of that payment hierarchy. I first led that study at TransUnion back in 2010, And we've since, we had done a refresh of it during the pandemic. And, obviously during the pandemic, we had a shift where consumers were paying their mortgage first because they had to keep the roof over their head, right? In the last recession, we saw that the mortgage actually got knocked down in terms of priority. If you recall, right, home values plummeted. And so consumers were walking away from their homes. So of course they weren't paying that obligation. What I think will be important as more of the alternative data or even cash flow data start become part of the decision-making process for lenders or banking institutions is to update that hierarchy, because now you can incorporate things like utility and telco. And I think there's a lot of hypotheses about how consumers will rank order these payments, but we need the data, and we'll, like, that's an area that I'd be interested to kind of dive further into so that we can really see with these updated insights, how do consumers truly, rank order their priorities.
So Matt, when you talk about this different type of data coming in, which I sort of think of that as a marketing function, but right, like when I talked about marketing versus risk and the alignment of those two,
Yeah.
you and I on the intake call talked a lot about how they need to be aligned. Can you just give us your opinion on why that needs to happen?
Yeah, it's really important. And since my early days as an analyst working at HSBC, as you pointed out, which actually it was Household International. So it was pre-HSBC acquisition. But, I kind of view marketing and risk as two sides of the same coin. It's interesting though, back, that many years ago, risk and marketing were kind of always butting heads about where to put the priority, right? Marketing wanted to improve conversions. They wanted to improve approval rates, and risk said, well, time out. We need to manage losses and charge off. And so let's not just let anyone in the door. What we're finding as we add more and more data is making sure that these things are in sync, right? So I don't want to be bringing in a bunch of consumers that ultimately my risk strategy or policy is going to say, I'm not going to book you. Conversely, my risk strategy might open up during times of maybe interest rate fluctuation. And now all of a sudden there's a bunch of, consumers that I wouldn't have considered yesterday that today I want to go get. And if my marketing side isn't aligned to that, there might be a bunch of consumers that are sitting out there that want my product, but I'm not actually going and getting, right? So having that symbiotic relationship and ensuring that there's alignment between who you're bringing in the door and ultimately who you're booking is really important. And I've seen in many instances where not just the policy, isn't aligned, but the data being used, right? So if I'm bringing cash flow data into my underwriting process, it might behoove me to try to figure out how to get that data into the marketing process, because now I can evaluate the consumer on that same information from the start of the funnel all the way through the end.
And this data that you're seeing, it's really giving the power to the consumer, right? The power of choice. It's a very important thing. It's because it's totally shifted.
Yeah,
right?
Right. It's been kind of and this was something I've been tracking for quite some time, probably over the last 8 to 10 years, right? Especially with the advent of fintechs. Now the power of choice has shifted to the consumer. And we saw that, accelerate during the pandemic, right? Where everybody was buying stuff or financing things from their couch. But it really kind of, bolstered what was already happening. And so now the consumer basically at their fingertips can say, hey, if you're not going to provide me with a compelling offer in a short amount of time, I'm going to go elsewhere, right? There are so many options today, and I can do it from my smartphone, right? Which is kind of mind blowing when you think about, like, I can secure a $50,000 loan from a fintech in like 10 minutes. As we shift to open banking, right? So the 1033 rule was introduced. It's currently being debated, and there's some lawsuits trying to prevent it, but ultimately it's going to continue to create that power shift for consumers. So they're going to be able to have that cash flow and banking data at their fingertips to basically say, hey, I want to use this for this decision. I want to use this information to try to benefit me. Now, what's going to be very important for marketers, for risk managers, for the entire ecosystem is be able to understand, what those signals are telling us, right? And so as this new information comes in, the actual bank transaction data, first question is, can I categorize it correctly, right? How do I decipher if this is rent or is this utility? There's a lot of companies out there that are helping do this. A lot of the aggregators do this today. They'll categorize what the transaction is. But now as a lender or a marketer, I have to say, okay, what does this mean to me? This is above and beyond data I was getting yesterday. We also know that some consumers might choose to stop sharing if maybe a payment they know is not going to go through, right? And so they'll disconnect kind of that relationship and say, well, I don't want you to have my bank data for this transaction, right? And so it's going to be incumbent on analytics professionals, risk managers, marketers, right, to understand and decipher that signal and to be able to make better decisions with this information.
And I think, Matt, that's the better decisions is what all marketers want. But what you just laid out is just one piece of gathering data or the type of data. And there's all these policies and regulations behind that. So, I mean, that's one of the benefits of having someone like VMS on your side is that we do everything within a privacy compliant manner. And like we understand that. So I don't envy the marketers that are trying to go do these with all these different choices of data out there.
Right. Well, and then I would imagine too, when you think about the data that you're bringing in, but then also maybe the different channels, right, that you can actually attract consumers and understanding, I think your last guest talked a bit about orchestration and how you have to make sure there's all these pieces that come together. There's also the analytics behind all of that, right? So I want to know, like, if a given consumer is never going to interact with me over email, I should not put them in my email channel, right? Or if I know that like text is the way to go for Tim Finnigan, then I should always just text blast you. But there has to be analysis. So it's like getting the data in to help make these decisions, but then also having the feedback loop, right? And many times I've seen where, and you talked about measurement, right? So some of the guests you've had recently talked a lot about measurement, that you have to have that feedback loop so you understand, okay, are the choices I'm making with this new information, with the different channels I'm going down, is it actually making a difference, right? And how do I understand, am I being successful or not? What are you guys seeing at Verus? Because like beyond just the data part, what are some areas that you're kind of seeing that marketers need to be aware of, which then translates to risk managers as well?
Yeah, it's a great question, Matt. And we were just in New York City. We had this, it was our annual conference. It's called VIA. And we did a regional one in New York City. And I was leading a panel discussion with our product leads. And I asked them that question. It was sort of in a different way, but I'm like, you guys are the best ones out there or in our company as SMEs, because you're not only creating the strategy, you're going on these sales calls and you're talking to customers and understanding what their challenges are. And I asked each one of them, like, what are you seeing out there? And a lot of it was like, it depended on what the product line is, but transparency was one, what data is coming in there? How do you source that data? Like when you build a model, like how does that look? So a lot of it was around transparency. The other piece was a lot of our customers we touched on want to know about data privacy and regulations. Because in one of our sort of areas that we do really well on is helping our customers when they buy or sell leads and understanding that new FCC regulations with one-to-one consent. I'll do some cross promo here. We just are doing a webinar on the PX or the FCC consent. So yes. Do you see a lot of that with people you work with around transparency and privacy and regulation?
Yeah, I think it's in general, and I think it's just a matter of the kind of banking and lending ecosystem, right? Whether you are marketing or you're providing a loan, transparency, especially as there's more and more data, being added to the ecosystem, people want to understand, what does this data mean? How do I source it? As a great example, credit builder accounts are these new types of trades coming on, right? And they're meant to try to help consumers build credit. Well, some of them do that great. Some of them are more of a debit product. So how do you treat them, in terms of credit? And so a lot of lenders want that transparency. They want to understand, well, I want to know that this is one type of product versus another. Regulatory concerns are always kind of top of mind, I think. And obviously, I think privacy, as you mentioned, it's become more and more important because if you think about, right, as consumers start sharing more of their own data and they're the ones saying, yep, here you go, have my data, use it, ensuring that, is kind of, let me start over. Ensuring that data is protected, right? If I'm the consumer, I want to make sure that my data is not getting used everywhere, right? There's affiliate issues and, how do I ensure that this data isn't going to be used nefariously, right? All concerns that have been around, but I think it's gotten heightened since we've been having these new data sources become part of the standard kind of ecosystem.
Yeah, and it's funny. Yeah, as you're saying, I'm thinking businesses want more data points and consumers want to give less data points. So you're trying to figure out what's the new data point that we can get that will do it. But what it ultimately does is, and it's good for the consumers, is it helps you get identified with the right, message and how you want to be reached and that personalization. So.
And ultimately, I think, as more of that data is used in decision making, you can also put the right product in front of the consumer, right? And give them the right interest rate, So many consumers have a guess of what their interest rate should be. And if they provide this information, their hope is that you're saying, you know what, here's the product you deserve. Here is the interest rate that you should be paying for based on all this additional information. There's also the opportunity, financial inclusion has been a big topic in kind of the lending industry. And, the reality is for many of these consumers, they don't have credit bureau data, right? They don't have traditional bureau information. They're kind of invisible. And so this type of data becomes more and more important to identify the risks, but also to identify who's in the market for a product, right? Does that consume, many consumers say, look, I want to opt out of the financial system. Don't talk to me. Many others, though, are saying, you know what, I could use a new auto, loan, or I'm in the market for a new credit card. And without traditional credit bureau data, companies are going to have to lean on this other data more and more to make those decisions.
So, Matt, why don't we end with the hardest question of the day? With all your research that you've done and identifying market trends and relevant needs, what are you seeing going into 2025 that marketers need to be really aware of? And we can sort of stick with fintech and insurance and banking, sort of your core expertise.
Yeah, so an area for me that's kind of really of interest is how to best leverage AI, right? Because AI is everywhere and we're not getting away from it. But I think there's still a lot of unknown about how to best actually utilize it to be effective. And so I think that's an area in 2025, especially as new data is coming to market, cash flow underwriting, cash flow data, right? As that information becomes more and more ubiquitous, it's a question of, okay, how can I now leverage technology to help me make decisions? I do think it's important. And when I founded OGMA, part of my goal was to really still have the blend of art and science. So early when I was taught, how to build statistical models, it was always said that, there's an art and a science to it. The science, that has continued to progress, and things like AI help us with the science. I think the art side, which is the human expertise, right? The ability to understand your customer or the consumer you're trying to attract, those components that still are going to be important, right? So I think for marketers, as they're thinking about the next year, right, it's understand how to leverage AI, but also understand how to have that human touch and the art part of the art and science in what you're doing.
Let's end there. Great answer, Matt. I appreciate you taking time. I enjoyed our time together, not only today, but in the past. So let's do this again.
I'd love to, Tim, and thanks so much for having me.
Thank you for listening to this episode of the Marketing Rapport. This show is brought to you by Verisk Marketing Solutions, an organization created to help CMOs and their partners improve the reach, timing, relevance, and compliance of every consumer engagement. If you enjoyed this episode, make sure you subscribe to the Marketing Rapport wherever you get your podcasts, and check out the show notes for more information.